Private student loans are school loans offered by private lenders instead of the federal government. Private lenders include banks, credit unions, state agencies, universities, or other lending institutions. These types of loans can be useful if you need more funding than federal student loans can provide. These loans use your credit score, annual income, and more to deliver customized interest rates and terms, much like a personal loan or credit card. In addition, with private student loans, you often have the choice between variable and fixed interest rates and may be able to choose among a variety of payment terms, some as long as 20 years. Types of private student loans. There are a handful of different types of private student loans from which you can choose. Understanding student loans can help you get a better idea of which option is best for you. Degree-specific loans. On a basic level, private lenders may offer undergraduate and graduate student loans. However, some may also go beyond that with degree-specific loans for medical, business, dental, and law programs. You may even be able to get a loan to study for the bar exam or for your time at a community college. Degree-specific loans may have perks uniquely tailored to the needs of that program. For instance, a medical school loan may have longer grace periods or automatic deferment while you complete a residency. Lenders that offer degree-specific loans include College Avenue, Sophie, Earnest, Sallie Mae, Citizens Bank, PNC, and Ascent. Lenders may offer private loans for certain degree fields but not others, so it is best to check with each company based on your course of study. International student loans. International students may have a hard time getting approved for credit when they need it. They are also not eligible for federal student loans, which leaves private loans as their only option. Some lenders specialize in offering student loans to international students who may not meet the standard requirements for traditional private loans, though international students may need to have a co-signer who is a U.S. citizen to be approved. Companies that lend international student loans include Ascent, Citizens Bank, College Avenue, and Sallie Mae. Eligibility may vary based on individual lender requirements. Bad credit loans. If you need student loans and your credit history is poor or non-existent, your best bet is federal student loans because they typically don't require a credit check. However, if you need private student loans for bad credit, some lenders have less stringent credit requirements for college students who haven't had the chance to build credit or students who need the funding but don't have a stellar credit history. Remember that these loans typically charge higher interest rates than standard private loans. State-specific loan programs. Many states offer private student loans through a specific state agency. Examples include the Rhode Island Student Loan Authority, the Iowa Student Loan Education Lending, and the Bank of North Dakota. These private student loans are typically reserved for students who are attending a college within the state's borders but possibly also for residents who are studying in another state. Eligibility requirements vary from state to state. Income share agreements function differently than traditional student loans. Instead of making a fixed monthly payment based on your student loan balance and an interest rate, you'll pay a percentage of your income over a fixed number of years. Before you apply for an income share agreement, figure out what the income percentage and repayment term will be. These agreements typically also have a salary floor and a payment cap to ensure that both parties are treated fairly. Private student loans versus federal student loans. Private student loans and federal student loans are designed for the same purpose, to help cover higher education costs. However, while private loans originate from banks, federal student loans come from the U.S. Department of Education. Here are some other key differences between the two types of loans to be aware of. Loan amounts. Federal loans generally max out at $5,500 to $12,500 per year for undergraduate borrowers, but private loans often cover up to the full cost of attendance. Interest rates. Federal student loans give all borrowers the same interest rates, but private loans rely on your credit score to set rates. That said, you could get a lower interest rate with a private loan if you have excellent credit. But federal student loans are generally more accessible to younger borrowers without a long credit history or co-signer. Benefits. Depending on your financial need, you can qualify for subsidized federal loans, which don't accrue interest while you're in school. Federal loans also have many options for deferring your payments and offer income-driven repayment plans, which can make them more affordable for people who have low incomes. However, Private loans don't offer these perks.